Welcome back to Finweek Money Matters. Now, a government plan to introduce a new credit amnesty has been met with much criticism. In our personal finance segment this week, we discussed the merits, the possible pitfalls of such a plan. At the desk, we have Michelle Dickens, she's the MD of TPN, Logan Lawyer and consumer credit expert, and we also have Ina Meiring, she's a director in the financial services team at Werksmans. And Mark Ashton joins me again at the desk. Thank you so much for all making it. Perhaps, Michelle, let me come to you just to get the lay of the land. Why is the government pushing so hard to have this credit amnesty go through?
Well, there's a number of reasons. Getting people back into the credit market, getting access to people who have paid up their debts back into the market, assisting where employment records or people are prevented from entering the employment industry again because of having impaired credit industry. So those are a couple of the reasons.
Yeah, I mean, Stephen, I think one of the things that worries me, though, is that this is a big piece of, this is a big structural change in South Africa. Can we actually manage it?
Yeah.
Absolutely. I think that the credit bureaus are quite able to remove such a small segment of credit information from credit records. And remember, it's a once-off removal of adverse information only. Adverse information is the kind of information that says slow payer, absconded, handed over, written off. It's not the detailed information of what is paid or not paid monthly.
But is this a political issue at the moment? Is from a timing perspective, you know, we've got elections next year, you don't believe it's a political issue?
No, I don't think so, because I think the key thing is they've seen that the NCA's intention of levelling the playing field hasn't worked. And they need to sort that out in order to get the pricing, lower pricing of credit to poorer communities. So if you've got that skewing at the moment, where if you're wealthy you get the cheapest credit, if you're poor you get the most expensive, there is a need for intervention.
I mean, this is not the first time I understand that this intervention has been had. There was a similar intervention in 2006. And perhaps are there lessons that we can learn from what's happened in 2006? Did we find that there was consumer behaviour, change in consumer behaviour?
No, I don't think there was a change in consumer behaviour. The once-off amnesty provided for just after the Act came into operation was by virtue of the Act. So now the Minister has published this particular notice before the amendment of the Act, although they have published the National Credit Amendment Bill to make provision for the Minister. And I must say that particular amendment doesn't say it's going to be a once-off. And to your remark, the issue is, will this be done each time before an election? Right. I'm cynical about this.
Yeah, I mean, and I agree. I think that there's a genuine who is the winner and loser out of this. You know, the argument is that it's benefiting those with adverse credit records. My question is it being pushed by the industry that has seen credit lending shrink dramatically because of the credit and NCA? And I'm trying to understand who the winners are and who are the losers.
Well, the thing is, I mean, the cornerstones of the Act are that you shouldn't provide credit in a reckless manner, and that the customer must not become over-indebted. One of the important things that the credit provider must take into account before granting credit is the debt repayment history of the customer. And the debt repayment history he gets from the credit bureau, which includes positive and adverse information. Now, if you take away the adverse information, and if you look at that notice, you'll see that all adverse information lists, that's a very wide distinction being made. Those are going to be removed.
I see Stephen shaking his head vigorously. let me get those head shakes in.
Well, the problem is that people have misconstrued the removal. The removal does not include the removal of negative payment profile information. So the risk is still easy to calculate because you're able to adjust the scorecards. The reality is that consumers who can afford credit will get credit, and those who can't afford credit will not be able to get credit, especially in light of the affordability guidelines.
Michelle's eyes are not agreeing with you, so let me get her comment in.
So some of my comments are that what we must remember about the amnesty, it's a deletion of information on the credit bureau, but not a deletion of the responsibility of the consumer to repay that debt.
Yeah.
So this allows consumers potentially who might have negative information to have that removed from their credit bureau, to go back and re-enter the market where in fact they're already over-indebted and potentially could just further over-indebt themselves.
I want to understand perhaps the spillover effects in terms of the lending behaviour of the banks. Michelle, do you think that this would necessarily translate into a more conservative approach by the banks if once this thing goes through?
Well, absolutely. So what it could do two things. If you're looking at a consumer on the credit bureau and there's no information, in other words, it's a thin file, and there's no adverse information to rely on, you're not sure whether that consumer previously had negative information, has benefited from the removal in terms of the amnesty, or if that person always had a thin file, and therefore you're going to potentially price in risk there.
You see, I take a very different view.
Yeah.
I think that the reality is that if there's a thin file client, a client with very little data, then you can't assume that they might have had adverse information, because adverse information comes from the payment profile. So in 90% of cases, the L or the W that's in the payment profile reflects in the adverse information or public sector of the report. So really the two go hand in hand. And when you say you're removing adverse information, well, you're still going to have the payment profile information in most cases.
Go ahead,
yeah,
Mark.
I was going to say, there's three people who clearly have looked at this topic quite intensely, and we can't agree that whether it's a pro or a con. And obviously, it gives a platform for good debate. But isn't this this is a really contentious issue? And I'm not sure that it's been sufficiently well researched. If three people around this table here are not clear about what its outcomes are going to be.
I agree with you, and I think that the Minister should have given more information in his publication. Because the wording there used in that notice is very, very vague and wide, and it gives people coming to different conclusions as to what exactly is going to be removed. And we won't see that until the bill the amendment bill becomes effective.
I think a lot of the conversations have centered around the traditional banking sector. Perhaps, Stephen, you can give us some insights of the potential impact this is going to have on microlenders and players in that space.
Well, the microlenders have a very thorough process where they look at affordability much more than other credit providers. They have a face-to-face interaction with their clients, and it's likely that they will be more persuaded by their history of repayment, their own records of repayment. But yes, it would affect them more in the sense that most microlenders, I'm talking particularly the smaller microlenders, won't have access to the CPA payment profile data. So there's a bit of, although the research that you're talking about, Mark, actuarial research has been done to work out what the effect would be on credit risk portfolios, and it's negligible. So I really don't think that it's going to be that shocking an effect on the market.
Okay, but now, so let's use African Bank as a good example, seeing as they are structurally a massive player in that micro-lending space. They're battling to price their own risk at the moment, and Leon Kirkinis has come out and said we've got real issues managing our own bad debt here. And now suddenly we're going to go and take all of that history, all of that information.
No, we're not.
Okay, so we're going to say we're going to keep that information. We're simply going to, are we going to delete or not delete the information?
You see,
that's
the African Bank information will be their own records, as well as the payment profile information, which is going to be untouched. So they have full access to the payment profile, and consequently they can easily adjust their scorecards. It's actually a fallacy to think that they would be significantly affected.
I don't know. I genuinely believe that if you look at, we don't have risk management processes in place in a lot of the banks. If for such a large institution which claims to be able to price risk, and I'm a shareholder who got burnt in it, and I profit in the good years, but I get burnt in the bad years, how can such a big organization miscalculate its
Isn't that
risk?
a different question, a question more to do with affordability calculations rather than a question of risk calculation? You see, our view is that they have actually been fined for poor risk management, not poor risk management, poor affordability calculations. And that's a totally different story.
Michelle, I want to bring you in on this conversation around microlenders. Are you sharing the sentiments going around the table?
So when we talk about banking institutions and other CPA members, which are a credit provider association, for our viewers, those underlying payment profile lines remain, and that's very important because you get a trend of the paid on time or the payment status of those consumers. It's the lenders that are outside of that CPA environment where adverse information is removed, it becomes difficult for them to assess the potential client because they don't have access to those CPA records. So when we're talking about having these amnesties and doing affordability assessments, in my mind, it would be very important that role players outside of the CPA access that type of information in terms of their credit lending.
But how do you get them? How do you get to that point?
Well, that's very difficult because that's a closed user group, and they have their own structures and constitutions as well.
Let's look at how this is changing the lives of the potential 2 million people that it's likely to impact on. From your view, how does this change their possibilities and their prospects as active citizens?
Well, the one positive thing is that they can get employment easier, because an ITC check is always done on an applicant. And if they have a bad credit record at a credit bureau, they won't get employment. So this has been one of the driving forces, and I agree that's a positive. The negative is I don't agree with Stephen. I think that the credit providers are going to increase the cost of credit, because they have to price for this risk, and it's going to be passed on to the consumer.
So you see origination costs going up, and maybe the average interest rate to first-time
well, they have to price somewhere for risk. I don't think that you can make a distinction between reckless credit and over-indebtedness, because there is an overlap between the two. And as I said, one of the most important things in assessing a customer's ability to pay is the debt repayment history of that customer. So now you remove a large chunk of that, and it must have a negative effect.
And if you're doing this at the bottom of an interest rate cycle?
Even more so. Yeah, I mean, even more so, because to take your point about African Bank, their unsecured lending book is the one that got them in trouble.
Stephen?
The reality is that so much information exists in the unchanged payment profile. That's where the rich data sits for the scorecard. So you're talking about a negligible amount of data that's being removed that really only affects the non-CPA members. And even so, that's like 3% of the credit market. So in reality, I think that it's very easy to overplay the results.
I mean, one of the things I maybe want to come back to you, Mark, about is when we talk about the timing of the elections and the obvious low degrees of awareness exactly of what this credit amnesty thing is. If the government is trying to, pull a fast one on the consumer and say, look, this is what we're doing to you, do you think that's been communicated to them as well, that this is, I'll wipe off your credit, you go vote for me? I don't even feel that that's been communicated well.
Look, I don't know. I mean, I'm a conspiracy theorist at heart. I'm a journalist, so I get to be a conspiracy theorist. Right. But I do feel that the timing is very odd at the moment.
Some of the political parties have made a huge issue of this.
There's also been silence from some quarters, and maybe, Michelle, let me come to you with this. Are there sectors that are well positioned to benefit really well from this amnesty, and this is why we're not hearing any noises from them?
Well, following on from Ina, I think the trade unions have been very vocal about the credit bureaus and the amnesty, and actually we're just wanting to wipe out all information. Adverse just being part of that. Yeah. But one of the sectors that is going to benefit from this is absolutely the employment sector, and people looking to get back into some form of employment. Market. Absolutely.
We're expecting this to come into effect towards the end of the year, if I'm correct?
That would be the earliest, because they have to pass the amendment bill before the minister would have the power to do the once-off removal. Right.
Wouldn't it be perfect timing, though, to have it during silly season when everybody's needs credit and to go?
They publish it the 15th of December.
Absolutely.
I can't see that happening, just because of the legislative timetable, but I know it is an urgent thing that needs to get attended to.
Okay, Michelle, I mean, throw it to you. What are we going forward? I mean, what can the role players do? What's the ideal situation for a credit amnesty in South Africa right now?
The ideal situation. So there are two things that the amnesty affects. It affects paid up debt, and it affects debt that is still to be paid up. And I personally have no problem in an amnesty where your debt has been paid up. That information should be removed from the credit bureaus. I know that is a contentious statement in itself, but I personally believe that people who have gone to the lengths of repaying their debt should be rewarded and rehabilitated and brought back into the credit market. But taking information off a credit bureau where the information is still valid and the debt is still outstanding, I don't believe we're doing the consumer any benefit by doing that.
Let me just say, I understand that perspective, but the payment profile information remains. So it shows that you've not been paying for 8 months, 9 months, whatever the period is. The problem with adverse information is it's an opinion in many cases. So it's a slow payer, it's an absconded person. Well, who's to say that's true? Did they get the letter? You know, we have an innocent until proven guilty a mindset in South Africa. That's part of democracy. So I think the reality is that there's a need to level the playing field. It never happened in 2006, 2007. We're sitting with huge inequality. The government is trying to address that. It's not just, it's a social justice issue.
Final comments maybe from you, Ina, and maybe a response to the social justice issue?
Well, I certainly hope that in the negotiations with all credit providers that the government will be more specific as to what exactly is going to be removed.
And the rest of us will look forward to the 15th of December and cross our fingers for that. Thanks to our guests, Michelle Dixon, MD of TPN, Stephen Logan, lawyer and consumer credit expert, and Ina Meiring, director in the financial services team at Werksmans. Time now to befriend the trend. In this week's Befriend the Trend, we look at the opportunities in the affordable housing market, which according to an article in this week's FinWeek is positioned for growth. Mark, again, right off the back of this conversation about, the credit amnesty, would also open up an opportunity for people who would otherwise not have been afforded a home loan to perhaps go and get one.
Look, I mean, affordable housing is probably the most it is probably the most critical aspect of anybody's personal balance sheet. If you want to move out of the low income to middle income, you need a property. And what affordable housing does, and this is why it's a phenomenally exciting sector going forward, is it changes people's lives materially. Yeah. Until you have that asset, you never get out off that bottom rung. And I think that we've seen Calgary M3, for instance, has done very, very well at sort of the upper lower income. You've got RBA Holdings, you've seen Future Growth now putting a lot of money into it. It's a sector, I mean, maybe Michelle's even got some thoughts on it as well, but it's a sector that seems to be growing. It's got a lot of prospects and people are putting a lot of money behind it. And I think that if you think, you can imagine South Africa in 10 years' time, if this capital is properly deployed and there's proper quality, low-income, affordable housing put together in South Africa, it is going to change the shape of South Africa's middle class. Perhaps
let's bring Michelle into this conversation. Michelle, if we look at housing funds as an asset class, how are they performing relative to their peers?
They're performing nicely, yeah. And coming in from Mark's angle, from Calgro as well, there's a lot of other companies that are bringing in private equity into the company from places like Canada, specifically focused around affordable housing, and not just from a home ownership, Mark, but from a rental prospect as well. So bringing in quality, well-maintained rental accommodation. And if we look at our data specifically, it's very exciting. We look at what constitutes affordable housing in terms of the income of the individuals, and then we look at what the rental values are that people are paying, and then we looked at the payment profile of those specific tenants, and they're performing right where they should be at the top of the rung. So we're not talking about people who are unable to afford the rentals, we're talking about people who have an 86% good standing, which is, to put that in perspective, is as high as it's ever been since we started collecting the data in 2007.
We've got about a minute left, and perhaps Mark, you can just comment for me on FLIPS, which I understand is the Finance-Linked Individual Subsidy Program. Is this a game changer in the industry? Yeah, look, I mean, there are a couple of different programs in place. One of the issues you had with the old RDP houses were there were houses that were dished out. There was no secondary market for them. There was no ability to be able to trade them. And what's happening now is you're able to subsequently move up the property ladder. Being able to get the, if you're not earning a decent salary, you don't get in there. And these subsidy programs are starting to come in now. And they are giving access to people that are earning less than 10,000 Rand a month, being able to come in, get their foot in the property market, and hopefully enjoy the benefits in the long run. So